The Taiwanese index trading with gains of around 0.2%.
Q4 GDP, they have lowered the forecast from the earlier 7.2 on December 8th to 6.5.
Ola Electric's total store count now has increased to 4,000, with company adding more than 3,200 new stores.
Nifty starting at 23,800. We went there, did that, so about 3%, 0.3% higher for the Nifty and the sensex.
The real driver of cement business still in our country is what is called the individual home builder.
We still think it's going to be a very shallow cycle, 50 basis points spread over two policies.
We also committed to ensuring that by 2030, at least we have 100,000 women delivery partners on the network.
We start positive, even though it's holiday thin trade, it's, the so-called Santa Claus rally. But Santa doesn't last on the street. He quickly heads to the exit, and that's the problem that's playing out right now.
We have already decided to move the expiry to Tuesday instead of making it Friday.
Absolutely nothing happening on the Nifty after we cooled off from those opening highs. And it does not seem like it's the final expiry of 2024 because the usual volatility that comes with it is missing.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon and welcome to the last hour of trade. This is Closing Bell and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. And today joining us on Closing Bell after a long time is Lata, back in the hot seat to take us through the last hour. And it's extremely quiet, Lata, at the index level at least. But maybe you'll bring in some fireworks in the next 60 minutes.
Well, I hope so. Anyway, replacing or just filling the gap while the boys have fun, right? It's Prashant and Nigel's day out, and so the girls are doing the hard work, you and I. Okay, you're right about the fireworks missing. If you heard what, when we gave you the wrap of the day, Hormuz was saying we were expecting fireworks and it's not there. Asian markets actually have had a rally which we have not been able to live up to. And the reason why I at least was expecting a rally is that this is the last day of the December Nifty series. And the series started at 23,914. My expectation was that people will at least want to end in a no-loss basis. And it may not be very tough because the cat is away. Perhaps the FPIs will not sell as much as they sold yesterday. And in that case, it may be possible to move the index towards that 23,900 mark. We don't see much evidence now, but, we still have an hour to trade. Important point is, at this point in time, even the advanced declines is deeply negative. As you just saw the graph, it's almost 1.5 stocks, or rather 3 in the red for 2 in the green. That's a long way that the markets will have to overcome or fill the gap if they want to end with no losses on the Nifty. It's quite a random move of stocks. I don't have any reasons for why certain sectors are up, but power stocks are up. PFC, REC, Adani, Energy, those are some of the stocks that are higher. Likewise, the new listings have been doing reasonably well. Sagility, International Gemology, that is the IGI stock. These are showing still some spunk, and they're all trading higher. Metals are losing, again, for no apparent reason. If you see the rupee losing as it is till 85.27, when apparently RBI stepped in, a loser or a lower rupee would actually mean more expensive imports, and it's actually protection for domestic metal stocks. But at the moment, they are not showing any energy at all.
So it's very, very quiet. It's the currency with its weakening that's been making headlines. But just to talk about the movers and shakers, on the large cap screen, Adani Ports has completely taken off. Now, was it because of this tweet that Mr. Karan Adani put out some time back about a new vessel that's being inducted in? Not inducted, it's a new vessel that's arrived. The 100th commercial vessel to dock at the Vizhinjam port in just under 6 months. So, basically, he's kind of put the spotlight back on the ports business, which is sort of the big one that investors look at in the Adani group, and that stock's doing really well. But aside of this one mover, in general today, auto stocks have managed to buck the trend. So even now, I mean, the likes of M&M, Maruti, they're retaining Bajaj Auto, they're retaining a fair amount of traction. So autos is a side of the market that is slightly revved up. And then you have Bharti Airtel. You've heard us speak about Bharti quite often in this week, right? Because of, either the TRAI recommendations or the telecom subscriber data or the fact that they've repaid back some of those dues on the spectrum front. Market's taking note of all this, and Bharti has a steady climb up on the upside. On the downside, however, what is cooling off? Asian Paints, there's a Nestle, Titan, Tata Consumer. So very clearly, consumer is still very much out of favor. And the banks have led the market down today. No two ways about that. Because we started the morning with a great flare on the bank Nifty. There's a 1% surge. None of it lasted. The Nifty bank cooled off. That graph is telling you the story. And there's been no comeback, at least none up till now. And look at SBI, look at ICICI Bank, look at HDFC Bank. No help from the big boys at all today, which is the shape of the Nifty. The Midcap index, yes, is underperforming. There's very clear underperformance. This is the third day running, so it's not a great trend. Individual stocks are flying away, and we'll recap some of them. And Lata mentioned, for instance, Sagility. There's so many other names as well, which are up in about KFin, Amber, Nugent Software, Blue Dart. So at an individual stock level, thinner volumes, truncated sort of trade, there are exaggerated price moves that you're seeing. But overall, the market breadth is not healthy at all. So what about strategies now for the last hour? Let's go to Mitesh as always. Mitesh, good to have you on. What do you make of the day? The screen has been looking so similar last 2-3 sessions. You start positive, can't hold on, then you drift lower. What's the advice on the index, Nifty and Bank Nifty?
Yeah. So, Survi, nothing on the index, to be very honest. I've been advocating that will be ranged, and getting past 23,870, which is the 200 average area, would be tough, and we got a high around that level, 23,865. So I think we're still within that range. Look at individual stocks, therefore, to trade. I have a buy on Adani Ports, and that's something which has recovered well in the last 1 hour, 1.5 hours. It's a buy with a stop at about 12.15 for targets of 12.90, and a buy on HPCL, which I would recommend buying with a stop just below levels of 4.10 for targets of 4.30.
Okay. Well, for what it is worth, let me read out a quote from Intellect Design Arena. Sorry, Mitesh, thank you for that. We are going to come back to you with more questions. I just got preoccupied by the way Intellect Design Arena has been rising. Surabhi, among the many stocks that have been rising. Intellect
and second day running today for
13%, and for no apparent reason. So looks like the exchanges have written to this company, and the company says that they have nothing to report at all in terms of any development. And just to quote them, we wish to state that there have been no events or informations or decisions having a bearing on the operations or performance of the company, including all price-sensitive information that requires disclosure under listing agreements, listing regulations. So there you are. The company says that they have not announced anything, but the markets are trigger happy for some reason, and we will try and figure out what. Mitesh, just wanted to ask you, take your stocks on board in terms of last minute or last hour trading. But there is a significant amount of movement in the power stocks. Is any of them interesting you? PFC, REC, Adani Energy, not CG Power, anything not your interest?
Well, I think, Adani is something, which I was tracking. In fact, I had buy on Adani Ports as well. So between Adani Power and, Adani E-Solutions, Energy Solutions, I think Adani Energy Solutions is a slightly interesting chart. It's done a lot of base building around this 770, 760 zone. And I'm just waiting for the stock to clear past about 800, 805. Once that happens, look for a minimum of 832 and then possibly in a good case scenario, even 865.
Okay. All right. Thanks for that, Mitesh. We'll keep coming back to you. Let me also invite Devin Choksi, our expert, to take us through the last hour of trading with some fundamental views. Devin, before I come to you, why don't you listen to what BSC told us, because we are going to be asking you about this capital market related stocks which have had a superb 2024. One of the top gainers is BSC itself. The stock has surged 145% so far in 2024. But of course, HDFC Institutional Equities in a recent note said that there was a notional volume that dipped significantly across equity exchanges after the weekly expiry per exchange was brought down to 1 by rules, and also there has been reduced rating on the stock. That is the HDFC Institutional Equities perception. However, we spoke to the management, Sundararaman Ramurthy, and let's listen to what he had to say.
SEBI implemented all the rules in order to ensure market protection and also bringing better participation in the market compared to anybody participating. So from that, one of the important the requirements or rather outcome expected was there will be a rationalization of the notional volumes across exchanges post-implementation. And the expectation was to bring down the notional because there were too much of froth in the market. That's what some of the people were feeling. And also this month has been a month of lot of turmoil with lot of activity in US post the elections and the Fed rate cut and India's inflation numbers being perceived as high. Multiple reasons because of which the market went up to say 85,000, 86,000 and then came to 72,000, 77,000 and then went to the type of a market movement has been seen. The income earned is based on premium. The one part of the expenditure is based on notional, another is based on the number of contracts. If the quality of premium improves compared to the fall in notional and also the fall in the number of contracts traded because the contract size is also going up, naturally then it will lead to an advantageous situation compared to a disadvantageous situation, because while the income will increase because of the premium quality becoming better, the cost will come down because of the notional and the number of contracts coming down. I've always been maintaining that India is a very large country and there is more room for more products. Now suddenly the number of products have come down. So one more product coming in is, I think from a market perspective, is good for them. I also saw that MSCI is, the Metropolitan Exchange is trying to revive itself by issuing fresh shares and more market participants are taking part of it. I think it's a healthy sign. One important thing always comes to me is success of a product lies in its utility and market awareness. So these two are very important constituents to make a product success.
Okay, Deven, we played that bite only for you to get an idea of how ambitious the plans are. What's your sense about just BSE itself and the entire, what you can call capital market stocks? You know, KFin Technologies has done well. Motilal Oswal has done well. A whole host of AMCs have done well. What's your pick of the pack?
Yeah, Lata, good afternoon. Well, exchanges, depositories, the clearing corporations, AMC companies, brokerage companies, each of the market intermediaries are likely to see a significantly larger amount of play going forward in the coming years as well. Largely because of the fact that I think you are having significantly large amount of participation of investors. Even in the volatile month, I think as we report numbers, they reported numbers, 35 lakh new investors got added in mutual fund. So certainly, I think the exchange platforms are the carriers who are basically executing the transaction at the last mile level. And with the new products getting introduced, I think by one and the other exchanges, probably the volume is getting shifted into those new products. That's where I would like to say that, yes, I think there is a good amount of prospects going forward for some of these companies. We remain distinctly comfortable with the entire journey, except the fact that the prices have appreciated of all the intermediaries probably much sooner, and maybe I think they're discounting at least 2 years in advance. So that's the only discomfort. So once I think you get the valuation coming to your comfort level, that would be the time when you could possibly add the stocks into the portfolio. But otherwise, long-term journey remains clear.
Okay. Speaking of valuations, but I think that's an argument that you can have for many parts of the market, right, Deven? I was looking at Amber. I mean, Amber has had such a fantastic December, definitely in full Christmas spirit and getting ready to welcome the new year. The stock again today, I mean, it was up on Tuesday. Again, it's up about 7% right now. The year's gain is about 150% on Amber. And if you look at the last 2 years, it's even bigger. I mean, these stocks have been massive wealth creators, but they continue to trade at really high valuations as well. Dixon, I think, is in the 90s. Amber, I think, is, if I'm remembering correctly, somewhere in the 60s and 70s, thereabouts. So that's the next sector that we want to discuss with you, Deven. we caught up with a company which is in this segment, actually. Let's see if we can play out the PG Electroplast bites if we have them. PG Electroplast also has been making a lot of announcements. They announced a tie-up with Whirlpool, and in the morning we asked them about what the revenue implications could be and what is the overall growth they're expecting. They're saying 35 to 40% growth over the next 3 years, CAGR. That is what they are aiming and gunning for. Here are the management.
We have been in discussion with Whirlpool for this washing machine business for quite a while. And we are happy to announce that we have been able to convince them to look at outsourcing as an option. And we see a strong momentum in our washing machine business with this deal. And we are confident that we should be able to maintain a CAGR of almost around 30 to 40% for coming 3-4 years in our washing machine business as well. So, and overall guidance for the revenue is still stands at 4,250 crores. We might be updating our revenue guidance going forward. Whirlpool deal will definitely help us in further boosting up our guidance for FY26. But we will have to wait for a few more months. I think we should be making a guidance, specific guidance on FY26 once we close FY25 numbers and we make an announcement on our FY25 numbers. At the same time, we will be releasing a guidance on FY26 numbers also. But we are confident that we should be able to maintain a CAGR of 35-40% very, very easily for the coming FY26, FY27 as well. We are in process of expanding our capacities in washing machine business as well as in our AC business as well. So currently, we have a capex guidance of almost around 370 to 380 crores for FY25, which we are closing. And for FY26, we'll be making a capex guidance. But definitely, we are increasing our capacity for washing machines to almost 2.4 million units per annum.
All right. So that's a very confident-sounding management there. PG Electroplast, and the stock has been such a wealth creator. It's up some 300%. Let's pull up a one-year chart. I think it's up some 300%, almost to that effect in the sector. Yeah, 300% in the last 1 year. 150% is Amber and Dixon along similar lines. So the question really is, Deven, now there's Keynes, there's Amber, there's Dixon, there's PG Electroplast. Which one would you still buy given the run-up?
Surbi, I think most of these companies are quoting at valuations, I think, which are far more expensive. Though they are quoting at a growth rate of around 35-40%, I think, as we heard the management of PG Electroplast. I believe that EMS category is finding more amount of excitement, largely because of the fact that I think many OEMs are basically coming to some of these companies and they are putting across a good amount of business ventures ahead. But everything is in price. And today, I think the concern should be that given the kind of size of the valuation that these companies are commanding, is there a scope for any letdown? Is there a scope for missing the growth? If that is not there, then probably I think this would be very expensive valuation. In my viewpoint, I think market gives you the opportunity at lower levels in some of the cases. Whenever I think that comes around, I think that is the time to buy. I think chasing the expensive valuation may result into a costly mistake in the portfolio. That's what I think we believe. So we remain a little cautious at this point of time, though the underlying story, we don't doubt about it.
You know, many of the big boys are giving you that, feeling of neglect. Reliance may well end in the red for the year. And I believe it's the first time since 2014 it will do that. And very close to doing that are also, yesteryear marquee stocks like HDFC Bank. In these big boys, you are tempted to buy at the moment?
Yes, Lata, I think the downside in these companies, I think, is practically very, very less. And the valuation-wise, they're giving you comfort level. Market is fortunately giving you the price at which I think the corrected valuations are available. Maybe I think the stocks are not assuming the valuation, the momentum at this point of time, though they are available at attractive valuations. In my viewpoint, I think it is a game of patience. Some of these companies are likely to unfold much larger profit picture in coming 3 years and 4 years, given the size of growth that they're catering to. And that's where probably I think if one is patiently holding this stock, quite possible that I think you are going to get steady to handsome return over a 3 to 4 years time in some of these companies. So certainly I think we are of there to believe that since the valuation gives us comfort and the size of the profit that they are likely to produce in 3 to 4 years time, is something which is going to be significantly large, we would remain positively invested into these companies and maybe buy, I think, at corrected valuations in this market.
Okay, all right. We will get to Vamakshi in just a second. We're also trying to just get you that tweet that seems to have gotten the market so excited. Just again doing a stock check on Adani Ports. We'll get to the tweet in just a bit, where he's just talking about how well the port is doing and how the 100th vessel has kind of rolled in today. That's a big mover once again, just doing a check on Adani. We'll get to that stock and that tweet in just a bit. But in the meantime, okay, we do have the tweet right now. So there is Karan Adani talking about the arrival of Michaela, the 100th commercial vessel to come in at the Vizhinjam port. That is, of course, some commentary that's coming in over there. Is saying with the automated container handling, this new port in Kerala is a forerunner of our drive towards leveraging state-of-the-art technology. Again, there are no financials, but maybe it's just it's a thin market, lower on volumes, and that seems to be aiding the move as well. But let's ask Devin. Devin, Adani Ports.
Looks,
what would you call me?
Yes, I think looks very, very convincing, Surbi. I think these kind of companies. Vizhinjam Port, I think Vizhinjam Port that you're talking about, fully automated port, I think that one is seeing. Talking about, I think, significantly bringing down the cost of operations and at the same time handling the higher amount of volume. And it is this sample model which they are probably replicating across all the ports, I think, which they are holding. So that gives you the confidence that going forward in coming years, along with the higher volumes that they would be handling, they are also talking about bringing down the cost of handling. And that's where the larger amount of margin is being talked about. So we remain distinctly bullish about the prospects going forward for the port company like Adani Port, given the kind of strength that they have got, including in transshipments. So where we believe that I think this company has a relatively large amount of volume to offer. Fortunately, market gives you the opportunity at a corrected valuation. So these are some of the companies which you hold on for a longer period of time, where you get the distinctly high amount of prospects of earning higher return out of the business.
Okay, got that, Devin. Now, Vamakshi has been patiently waiting by with a list of mid-cap names that we should focus on. Stock like Seagull India, she alerted us earlier in the day, EPAC Durable. Go ahead, Vamakshi, what's on your list?
Well, thank you so much for that. Seagull, its subsidiary Ludhiana Bathinda Greenfield Highway has signed a concession agreement with NHAI. This project is valued at 981 crores and is slated for completion within the next 24 months. And after its completion, it will be operated by the company itself. EPAC Durables is the next counter that we're keeping an eye out on, and that is because the company has provided a clarification with respect to media reports which indicated that Hisense Group, which is China's top TV company, plans to buy nearly 26% stake in the company's subsidiary. Now, the company clarified that business discussions are currently underway. They are currently in the very preliminary stages, and further they said that they will file a disclosure in compliance with the applicable laws when required. Apart from that, J&K Bank is another counter that is surging in trade today, and that is because they've appointed Mr. Amitava Chatterjee as the managing director and CEO of the bank. Nalco too is in focus today because the company has signed a mining lease deed for the amalgamated Utkal D and Utkal E coal block, and thereby they've managed to enhance their coal production capacity to 4 MTPA. Panacea Biotech is the next counter we're watching out for. They've received a letter of award from UNICEF, and this is for supply of 115 million doses of its bivalent oral polio vaccine, and this is valued at somewhere around $15 million, and that is approximately 127 crores for calendar year 25. And lastly, Ramki Infra. This is a counter that is in focus because they've received an LOA from the Hyderabad Metropolitan Water Supply and Sewerage Board. This is for a project worth 215 crores.
Wow,
Okay.
that's quite a punch Vamakshi managed to pack, right? 6 stocks and all, right, Vamakshi? I was trying to keep a count.
I think, yeah, it's somewhere
I think
around
6.
that.
It's around 6. Fantastic. Thank you so much for that neat wrap. Well, let's ask Devin before he goes. Devin, any of these 6, if you like them, if you track them, or leave us with your own pick for 2025.
We believe that I think the good amount of growth opportunity is being seen in likes of Tata Technology, in the likes of Bajaj Housing Finance. They have corrected significantly from their peak levels, and probably the business environment in which they are showing robust growth. So certainly, I think we believe that these are some of the companies which are producing high growth, high profits. they probably would have relatively better take as far as the market is concerned. 2025 and beyond, I believe that I think such kind of companies are the ones I think should be there in the portfolio. That's how we look at the investments.
Okay, Deven, thank you very much. I won't yet wish you a happy 2025. We are hoping that we will meet in 2024 before the year is out. Thank you very much for spending time for us today.
Thank you, Lata. Thank you, Surabhi.
Okay, now as we step into 2025, CNBC-TV18 is asking some key questions of experts. How will the Nifty perform in 2025? What are the sectors, the themes to bet on? Will the faltering GDP growth revive in 2025? Will the Reserve Bank start cutting rates in 2025? We will ask these experts on your behalf. Stay tuned for the most comprehensive market poll coming up soon on CNBC-TV18.
Welcome back. So the markets are very, very range bound. There's not much moving, barring individual level stock action. So let's straight away take it to our next guest. Raunak Onkar of Parak Parik Mutual Fund is with us now. Raunak, great to have you on, and it's been a pleasure really speaking to you through the year, right? We've tracked the markets ups and downs, and of course the changes in your portfolio as well. Now, I remember last conversation that we had, you were running very high cash levels because you were not happy with the valuations in the market. At that time, I think cash levels were as much as 15%, 15 to 16% in your funds. What now? Because you've had a time, you've had about 2 months of time correction and price correction in many, many stocks as well. So what is the cash level, and have you been buying through this correction?
Thank you for inviting me, Surabhi. Again, last time we spoke, I think we were on about 20% of cash in our flexi cap fund and even a tax saver fund. But since the past 2 months, like you said, there has been a time correction in many sectors, whereas a broader market correction in some of the sectors or stocks. But I don't think it is anywhere at a comfort zone where we can justify allocating more to some of these ideas. I mean, they have been coming down from the peaks, but the peaks also were extremely overvalued. So I think it's time will tell when we will get a right opportunity, but the cash accumulates till then.
Okay, it's as high as 20%, you're saying?
20%.
Okay. Raunak, if you were to deploy, which is the sector that even now offers you some comfort?
So private sector banks have been very, very comfortable place to deploy capital. Whereas at the moment, the schemes are fully allocated in our view. About 20% of the fund is allocated towards the 4 top private sector banks. And within that, we find the valuations to be comfortable. And of course, the opportunity is well known. The kind of brand franchises these run is well known. The digitization of payments and everything in the financial ecosystem also helps these businesses. And the valuations have been attractive. But I don't think we can go overboard and allocate a much larger chunk of the fund. So I think we are comfortably allocated. And that's the area where I think there's the most value at the moment.
Okay. You know, again, one of the stocks you will never expect to find in the losers list for a year is Asian Paints. That's one of the stocks that is in danger of ending in the year in the red. Yeah. Paints have been, you know, a great deal of competition, probably urban consumption slowing. But is it time to deploy primarily because the market dreads? Raunak?
It's hard to say. So it's a company that we admire a lot, we've been tracking for a very long time. And this sector, if you see, did not have very meaningful competition for a very long period of time. And the secular trend in terms of growth, which the sector has seen, has been phenomenal. And I don't think that sectoral growth is going to change. And I think that's the reason many new players are also being attracted and are deploying capital. But I think we have to wait and see how the competition shapes up, because it's not a game of just launching a product or launching a business, but also figuring out the distribution, figuring out the brand strategy, where it fits within the consumer or whether even the B2B kind of way that these companies will scale. You have to understand how the distribution pans out. So although we are, it's interesting to see valuations coming off and this company which we can buy eventually. But I think it's too soon, I think, to comment on whether this company will do well or some other company. I think we'll study the sector for a while till the valuations cool off even more.
You know, Raunak, you've always had a fair share of capital market plays in your flexi cap fund, right? From the likes of MCX has been there for a long time. Then you have stocks like Motilal Oswal. You have a depository, I think, right? I have the disclosures here. Yes. There's CDSL also in the portfolio. There's UTI Asset Management. So what is your thought process now? I mean, are you looking to take some profits? Because one argument is that for pure broking businesses, if the market remains sideways, you know, typically volumes come down. Are you looking at more wealth management plays? And in asset management, you've only stuck with UTI. There are other entities as well. So just explain your thought process when it comes to capital markets. And you don't have a BSE in your portfolio, which also in between had a fantastic move in the last few months.
Yeah, BSE would have been a bit of a miss. The kind of growth that the company has shown and the kind of re-rating the stock has had, it was a miss in a way. But if you see the other capital market plays, we did okay in participating in CDSL, Motilal Oswal, and even MCX. Now, some of these stocks, when you look at them from a cyclical point of view, you realize that as the volumes have scaled, as the capital markets, even the participation of more retail players have come in, we have realized that this trading volumes cannot sustain. I mean, cyclically, most of these companies probably will be trading at a peak. And based on that, we saw the valuations not being comfortable at all. And we have been trimming them over the past few months across the schemes.
Yeah. Okay. You know, one more stock, since we're talking financials, let me talk about your largest holding, which is HDFC Bank. I mean, that's over 8% of the portfolio, right? And this one's really testing investors' patience. Obviously, you know, people like you are in it for the long haul. I mean, this is not a quick trade. But, you know, I'm sure it hurts at that level, 8%. But you're keeping the faith on large financials, large banks, any rethink? What's the thesis as we enter the new year?
I think hurting because the stock doesn't move is the feature of capital markets, not a bug. So whenever we see that a company we like and we have conviction about the business and their performance over a long period of time, I think you have to wait and watch how the numbers will pan out, especially coming from a merger with another large entity. And also, we are facing some of the growth issues overall across GDP as well. I think over a period of time, the process, the performance of the team, the distribution network, and digital adoption of some of these banks will show itself over a period of time. But meanwhile, we are okay to wait and we are okay to let the business perform and deliver the returns. I don't think we can judge too soon in terms of how the valuations will play out in this sector. But I think from a business point of view, some of these private sector banks, including HDFC, are solid businesses, and they actually deserve the growth that is coming to them.
Okay. Can you advise investors on what kind of fund they should think of at a time when the market seems to be in for a time or price correction? Should it be flexi cap? Should it be multi-asset? Actually, you have a dynamic asset allocation, right? Should it be those kinds of funds, or would you go even to some sectors which are ignored?
That's a very important question. I think what happens over a period of time, people generally have a asset allocation plan that they want to execute over a period of time. And when we see markets or equity or some asset class doing very well in the short run, that asset allocation gets really skewed. And I think every investor has to then go back to the drawing board and say that what their intended allocation was, what kind of risk appetite they can tolerate, because not all these valuations will remain steady. So what if there is a correction in an asset class which has done very, very well? Do they want to stomach that correction, or do they want to reallocate that money to other asset classes, which again is within their understanding of how the markets work or what the asset classes they understand or not? So I think asset allocation decisions have to be made when markets have. I think we have been recommending people that debt looks far more attractive in terms of allocating, because over there at least you will get money market returns plus something if you're investing in SDLs. At the same time, equity, the valuations are not letting up. In fact, that's the reason we are putting our money in cash, which actually earns us at least money market returns, and we are getting paid to wait to find good ideas to allocate money.
Fair point.
But I must say that Raunak's is one fund that, if not asset allocation, it just does allow for diversification, because they've always been invested in large US technologies, right? So I need to ask you this. You're sitting on 20% cash. Aren't you thinking of any more new US ideas? For instance, I mean, I was reading somewhere the other day that Broadcom could be the new NVIDIA. Now, I haven't studied the company enough. I have no idea. But just curious, not looking to buy more in US equities, where traditionally, I mean, you've been the first movers out of an Indian asset manager.
Yes, Urbi. So over a period of time, we have had 1/3 of the fund invested in global stocks, and we would love to go back to that kind of number in the future as well. However, I think since 2022, RBI has this limit of investing by AMCs in foreign stocks, and we cannot repatriate new funds. So we've been restricted to allocate new money over there. So far, we only reallocate whatever dividends that we earn from our existing investments, which is about 12.5% as of November fact sheet. But if you see some of these companies, it's very hard to find ideal replacements for a company like Alphabet, Meta, Microsoft, or even Amazon, because these companies have their own growth tailwinds working for them, and the valuations are not too extreme as compared to the same growth rates we see in India. So I think it will be a very, very tough time to actually find a different stock which allows us to replace some of these giants in the portfolio. But I agree with you, the valuations in the global markets are far more comfortable compared to Indian markets.
Just a final quickie before we let you go. You also have some investments in power stocks, right? Power Grid is there, Coal India is there. Is there still any attraction in this sector, or again, price is a problem?
Sectorally, I think we don't think about it sectorally, but as businesses, if you look at the overall renewable boom that we are seeing in terms of capex happening in renewables, you will need some sort of a mechanism at a national level to manage the grid. And at the moment, Power Grid is the best possible idea where you can manage the entire grid as renewables keep coming up. And the whole idea behind Power Grid as a business is their cash flows are not dependent on which capacity comes up, but just to keep the grid running is how they make their money. And whereas a company like Coal India is a very different business where, again, it's a monopolistic PSU where nobody else has the kind of scale and productivity that they have in terms of generating cash from business by just providing coal to thermal power. And no matter how much we quickly want to move towards renewable, we are still beholden to thermal power as an important power source. So we cannot wish it away, at least for the short term. Maybe in the longer term, it will be more skewed towards renewables, and we have to then think about these cash flows disappearing. But that time is not very soon.
We'll leave it at that. Pleasure speaking with you, Raunak, and hope you and everyone else at Parag Parikh have a great 2025. Thank you for spending time with us. Okay, so that's the word coming in from Parag Parekh. You know, for a long, I was keeping my fingers crossed up until the end of trading day. We are now just into the last 25 minutes, hoping that the Nifty expiry will bring the market back at least towards that 23,900. But no, the market is stubbornly at the 23,750 flat line mark. On that note, we'll take a break and let's see whether we are lucky when the segment starts. We will be getting you the buy today, sell tomorrow calls or the sell today, buy tomorrow calls from our technical experts. Welcome back. Markets a shade of green as far as the Nifty and Midcaps are showing. So there's a bit of a narrowing of the advanced declines ratio, but nothing much. We promised you the buy today, sell tomorrow or sell today, buy tomorrow calls. And Mitesh Thakkar is here to tell you exactly that. Mitesh, what's that trade, the BTST trade?
BTST on Indigo, recommending a stop below 4,700 for targets of around 4,750, and that's all for tomorrow. The other one which I like is Sun Pharma, BTST here with a stop at 1832 for targets of 1855, 16 zones.
Okay. Thank you very much for that, Mitesh, for the BTST calls as well. We are still having our eyes transfixed on the indexes, especially the Nifty, its expiry day, like I've been saying ad nauseum, and one was hoping a pull towards 23,800 and then 900, but that's not happening. In fact, there was one move to 23,800 early morning, and then they saw it give up those gains. And as you can see in the chart, it never got back to even the 800 mark through the day. It's been so flat. And the bank Nifty has been, of course, the disappointment of the day. Now let's try and get some more fundamental calls. Market expert Ambarish Baliga joins us. Ambarish, good afternoon and thank you very much for joining us. Well, you know, today we've been speaking a lot about Gland Pharma and the notice that their French unit has got from the French drug regulator. But that's the stock of your choice today?
Absolutely, because if you look at Gland, it's one of the largest and fastest growing injectable manufacturing companies with a global footprint across 60 countries. And they have a huge range across sterile injectables, oncology injectables, as well as ophthalmic injectables. Q2 numbers, in fact, were in line after a disappointing Q1, but the management commentary has been quite positive. If you look at the biologics-based contract manufacturing, that's reviving well. And now with the latest tie-up with Dr. Reddy's, that should really help. US pipeline buildup also has been decent, and they've been regaining that lost ground. 4 molecules, in fact, were released or launched in US last quarter. Zenzi, which was acquired in 2022, has been a drag, overall on the revenues as well as EBITDA, because the revenue was about 360 crores last quarter. There's an EBITDA loss of 69 crores. But the management is expecting a positive EBITDA from Zenzi in Q4 FY25 and substantial improvement in FY26. So expecting a consolidated EPS of about 70 in FY26. With that, my target works out about 2,450.
Okay. But, you know, Ambarish, thanks for the comprehensive analysis of Gland Pharma. Basically, pharma has had a much better year than most other sectors. 2024 has seen a decent amount of gains. Is there anything else, or is it still likely to continue in its positive trend?
Yeah, we should see a positive trend, but I really don't see a huge outperformance. I mean, you'll have a couple of them outperforming, and surely Gland would be one of them. Dr. Reddy's the other one. But then overall, I see like the pharma sector doing decently well over the next 1 year. And overall, if you're talking about the Nifty, again, I don't really expect a huge sort of a move in Nifty, because we've seen that happening in the last 3 to 4 years. So 2025 would be a year possibly of consolidation, in which you'll see slightly better movement from the pharma space.
Okay. Thanks for that on pharma. Now, the other sectors that were the toast, at least in the first half of 2024, were sectors like power and defense. Is there anything else? I mean, maybe not defense. Let's speak about power. Even today, we have seen PFC, REC, CG Power. Power has been a bit of a positive theme today. Is that a theme you'll continue to play? Because it's, of course, an inexorable need.
Absolutely. I mean, power is a theme to be played if you're looking at the next couple of years. And in that, clearly, my pick has been Tata Power, again, among the largest in the private sector, increasing their green energy portfolio, which, again, should be a major green energy producer by 2030. So that's one space clearly I'm looking at, and that's the stock I would recommend even at these levels. And if you're talking of defense, I think at least for the time being, the best is behind, because most of them have been multi-baggers. I mean, we have seen 10x and 15x sort of multi-baggers in defense space. So they have moved up much more than what the the fundamentals define. So at least for the time being, I would see some amount of underperformance. If you're talking of the next possibly 2 to 3 quarters, there could be underperformance. Once there's a decent correction, we've already seen a about 30 to 40% correction in most of them. Once they correct possibly 50 to 60% from the top they had reached, I think they would become worthwhile buys. And that I think would happen sometime by the end of first quarter or possibly second quarter of the calendar year 2025. That's the time I think we should again look at defense, because whatever said and done, it's clearly a very good long-term story as far as India is concerned. I think the other space,
Go ahead.
The other space which has done decently well and continues to do well, in the calendar year 2024, are the EMS companies. I mean, most of them have become multi-baggers, whether you talk of EPAC or Dixon, Amber, Keynes Technologies. I think all of them have done extremely well in this year. And I think that run at least will continue for at least a quarter more.
Yeah, that run is continuing today. And how? Look at those stocks. Look at the move on Dixon right now. Dixon wants to keep Amber good company. Amber's up almost 10%. This follows on, a strong move in the earlier part of the week as well. That's Amber 10. Now, Dixon says, why should I be left out? I want to join the party. So that's what's happening with the EMS plays. But, stay on, Ambrish. We want to now ask you about a different set of stocks. Stocks which are really huge. They are big giants in the Indian capital market, and they've not had a good year at all. We have Hormaz joining in. He's looking at 10 such big companies on the Nifty that have made records, but not necessarily for the best reasons. Hormaz.
Quite a year it has been for the Nifty, right, this time around. But there are some stocks that have made records, not necessarily in a good connotation. And we'll look at some of those. We start off with the index heavyweight, that is Reliance Industries. And with a 5.5% drop that this year that the stock has had, this may end up being the first year since 2014 that the stock has delivered negative returns. Now, yet, the street remains bullish and most analysts continue to have a buy recommendation on the stock. Price targets ranging anywhere between 1,350 to as high as 1,950 rupees on the stock. But on to the other company that we are talking about is Asian Paints, and it wasn't a bad year until the last quarter results, but since then the drop has taken it to be the worst calendar year on record for the company. Now, in fact, since 2010, the stock has delivered negative annual returns only thrice, and 2 of those years being 2022 and this year so far. Most analysts now have a sell rating on the stock, targets ranging from 2,080 rupees to as high as 3,750, but the stock is veering more towards the former right now. On the flip side, Trent has been a wealth creator and a giant wealth creator at that, and it is also the top performer on the Nifty this year. The stock doubled last year, the stock has doubled this year as well, and starting 2014 the stock has had positive returns every single year. The street continues to remain bullish on the stock with price targets with as high as 9,350 rupees. Mahindra & Mahindra is a turnaround story. The stock has had its best year in terms of returns since 2009. The stock is up 70% this year as well, and only 3 negative annual returns in the interim between 2009 and this year. The street remains constructive, targets of anywhere between 2,700 to 3,700 on the stock. Now, HDFC Bank, positive returns every year since 2013, but 3 of those last 4 years are returns in single digits. Yet, no analyst on the street has a sell rating on HDFC Bank with price targets ranging up to as high as 25.50. Now, FMCG is a sector that is disappointed as a whole this year, and HUL is among those disappointments. A 12% drop here, which has made it the worst calendar year so far since 2004, and yet has delivered negative returns only 4 times since 2007. The street, though, is optimistic, analysts giving targets of up to 3,400 rupees on the stock. Staying with consumption, Titan is set for its first negative calendar year after 2016, and since 2016 the gains have ranged between 10% to as high as 150% on the stock. The street, though, expects the stock to touch as high as 5,000 rupees, but the bears keep it at as low as 2,800. And rounding off this consumption theme is Nestle. If HUL was the worst year since 2004, this is the worst year for Nestle since 2002, and the MNC has given negative calendar year returns in these 5 instances. But most analysts have a hold or a buy rating on the stock, price targets ranging close to 2,900 rupees. Now, banks make an appearance here with IndusInd Bank, positive returns in 22 and 23, but the worst performer on the Nifty this year, down 40%, and is the 5th time in the last 7 years that the stock has had negative returns. Yet, 37 analysts continue to maintain a buy rating on the stock, targets ranging up to 1,950 rupees. And lastly, despite all the news flow, Adani Ports, our news flow this year and last as well, Adani Ports has managed a positive calendar year return, the 5th time in a row that it has done so, and analysts too have a near consensus buy rating on the stock, targets ranging close to 2,000 rupees a piece. So the Nifty may have had a 9% return so far this year, but it is specific stocks that have grabbed headlines, some good, some not so.
Hormaz, thank you very much. What an interesting list. It's not only the movers on the upside, the movers on the downside are also making big headlines.
And what lovely nuggets you have picked up.
Yes, absolutely. You're wonderful. Let me actually take that back to Ambarish. Ambarish, for the stocks that have been testing patience, the wisdom in market is always good to get. And the wisdom tells you that you have to buy good companies, good businesses, when times are tough. It's just a little difficult to implement that wisdom. So you tell us, in stocks that have just not performed, that are ending their negative, big, large stocks, would you be a buyer of any of them? The ones that Hormaz just named.
Surabhi, I'm more of a contrarian buyer. So I, in fact, look for these sort of opportunities where the stock has not performed, but then can possibly perform going ahead, and are decently large-sized, basically like leaders in the sector. So out here, Reliance, I think, clearly is an opportunity to buy. I mean, possibly we could get it at levels of about 1,150, 1,200. So I think that should be the level to start buying into Reliance, because right now they are again in an investment mode. And I think that should start giving them those results possibly from FY26 or FY27. So one has to buy and possibly hold for the next, 1.5, 2 years. The other one clearly is Asian Paints, which has been, I think, one of the worst underperformers in this market. Because the way I see it is clearly Asian Paints is a leader, and I don't think anyone can really challenge it, at least for the next few years, possibly a decade more. Because if you look at Birla Opus, I mean, they are in an investment mode. So whenever you have a deep-pocketed, a competitor in an investment mode, so they don't really bother about the losses which they're making, it starts hurting everybody else. But again, it can't continue in the investment mode to eternity. So somewhere things will normalize. And I see that happening possibly in the next 6 to 8 months. So even if you see as of date, Asian Paints is 3x the size Birla Opus is planning to achieve in the next possibly 2 or 3 years. So there's a huge gap between Asian Paints and Birla Opus. So I think with this sort of a correction which you have seen, a good time to again buy into Asian Paints. Possibly we could see 2050, 2100 levels, but then you can't catch the bottom. And I still have the price target of 3,900. I had that target in 12 months. It can get now extended to about 18 months to 24 months.
Okay. Ambarish, thank you very much indeed for joining us with your views on a bunch of sectors and, of course, that comprehensive analysis of Gland Pharma. Have a great 2025 if we don't meet.
Thank you. Wishing all of you a very happy new year and all your viewers.
Thank you. Okay, we just have about 5 minutes for end of play. So we'll take a quick break and come back and check out if the markets gained something before it says goodbye for the day. Welcome back. The last few minutes are not proving to be very exciting if you were hoping as a Nifty trader that the expiry will bring it back to the 23,900 mark. It showed no such promise at any point in the day. It just started and took a shy at 23,800 and has since remained below that level. So it has been really a day where the bears have ruled with an iron hand. This despite the fact that the Asian markets actually gave us a bit of a springboard to start on a positive note. You could blame it on the rupee. The rupee had a bad day. It went from weakness to weakness until the Reserve Bank stepped in, we understand from traders, around that 85.26 mark and just arrested the downswing. But we didn't see any recovery at all in the currency. And why would you? It seems like headed lower along with most other Asian currencies, given the strength of the dollar. So it's not been a day for the bulls at all, despite some positives that we started with. Let's take a look. In fact, we did a detailed analysis of the cement sector. And one of the guests we spoke to was Birla Corporation. We spoke to the management, the CEO, Managing Director, Sandeep Ghosh. Listen to what he had to say in terms of how much demand he expects in 2025 and what may be the gains in EBITDA per ton.
The prices have moved up by and large in most regions, except so much in the south. And the increase is modest, though. I would place the increase between 5 to 7 rupees a bag, which is, say, around 150 rupees a ton. So that is there, and I do expect it to be to hold on, and especially things should pick up further in January once both the cold recedes, and then there is also this whole impact in the north of what they call the Malmas. During mid-December to mid-January, there are no new constructions, particularly in the individual home sector, which start. Large players, again, I think instead of exercising pricing power, they will be greatly focused on costs. Especially one of the large players is, focusing a great deal on the supply chain, doing major disruptive, changes, moves in the supply chain, because they have, and that is as per their stated policy. So you will see a lot more focus coming in on cost savings rather than taking huge price increases. That's my overall assessment. But certainly FY26 looks better than what FY25 and FY24 second half was.
And on cue, the bell goes off. So let's recap what has been a quiet session. The ending is showing a tinge of green. So maybe even it's not that bad from the bulls' perspective. 35 points up on the Nifty. So a bit of last-minute flurry coming through. And you have stocks like Shriram Finance, Kotak Mahindra Bank and Hindalco to thank, because they added to the Nifty's tally just as we were winding down for the day. And some of the PSUs like BEL, SBI, they have managed to move higher as well in the last couple of minutes. Overall, if we talk about the big gainers, Adani Ports, M&M, Maruti, and Bajaj Auto from the Auto Pack, all of them doing fairly well. There was SBI Life, Shriram Finance from the financial space, and BEL and BPCL are some of the PSUs that have had a good session today. Let's talk about the flip side then. Consumer definitely out of favor. Titan, Tata Consumer, Nestle, these are some of the stocks on the way down. HUL, ITC, no great shakes here either, so some red around these names. Reliance has had another negative session, down about 0.5%. On the mid-caps, thin volumes but big price action. So let's look at some of these names. New India Assurance, 4%. CG Power, 4%. Sigility, again a 5% move on that stock. There is Niva Bupa, 7%. And Intellect Design Arena. Intellect this week, and it's, we're talking 3 days, it's put on 30%. That's the kind of move on Intellect Design Arena in just the last 2 sessions or so. So some big stock-specific moves, albeit you can question the volumes, because overall volumes are, trade today, NSE and BSE put together is less than 5 lakh crores, given that we are at that time of the year. All right, with that, we will take your leave. It's curtains for Lata and me. Thank you very much for being with us on Closing Well. I am, of course, still here because we have the market to discuss for tomorrow and the outlook and the setup. Markets Forward coming up next.